Welcome to Stock Odds Podcast, Odds and Ends Market Talk with Rob Friesen and Dave Singh. We're here trying to increase your probability of winning trades and increase the chances of your success. So today we're here with Rob, and we're going to talk about what Odds and Ends is as a podcast and how this is going to add some value to your trading.
Why call it Odds and Ends? What's the deal?
Well, odds, most traders aren't trading with probabilities in their favor, with statistics, with an edge. And that's where the difference between 99% of the traders that lose money and that 1 or 2% that make it, they're trading with a positive expectancy and a positive edge and a high probability trade. So this is not easy to do. This is not easy to, if it was, we'd have more traders making money consistently for their career. So that comes from various things like having a good set of data, systematic approach, a mindset.
So you think we can tap into, the odds and ends, the fragments, the discarded pile, the people that, they don't look at these types of things as a main event, because everybody's looking at the few names out there that, 90% of people chase after. It seems there's a lot of volume in one name, and then it moves to another name, and so on. These are the leftovers, right?
Yeah, just like you would see at a garage sale in your neighborhood, most of the fragments, the leftovers that no one wants, very few will take the effort to show up and scavenge through those. That's kind of where we're at with odds and ends. There's many opportunities in the boring, many opportunities in the underlooked. Everyone goes after FANG. Everyone wants to buy stocks at the open, pay up for them just to participate. But what about the other ones?
Do you think that people look mostly at signals and they discard all the opportunity that comes from the noise?
No, I think most people go off sentiment, news, what they see on CNBC, their gut. It's intuition for most traders supersedes logic or odds or favorable approach to things.
Okay, well, I'm going to kick it off here with StockOdds Seasonality Almanac. It's free for people to go to mystockodds.com and look at the dashboard that we created, which is Seasonality Almanac, kind of like the Farmer's Almanac idea for, reading the signs and knowing when to plant your seeds and when to harvest and all that. We look at the same approach here with StockOdds and curating the odds or the probability for our trades for whatever time frame we're choosing. And you can choose, open to close or close to close or 3 days, 5 days, 10, 20, or monthly. So there's different time frames that you can trade off of. So first off, I'm just looking at what to expect for August. So this is Sunday night. We're looking into Monday morning, first trading day of August, and we're saying, what does it look like? Well, the first trading day of the month is up slightly for the S&P and up slightly for the Russell. And we could go through and look at the Qs, which is the NASDAQ 100. We could also look at the Dow Jones and see what it's up to. Well, as it is, we're already lifted off. So the futures are indicating that, at this moment in time, as of the broadcast recording here, that they're positive already. We have at this moment here, I'll just dial this in, the S&P is up 22.75, so it's up 0.52% right now. NASDAQ 100 up 0.49%. Dow Jones up 0.46, so pretty similar there. Russell's up the most at the moment, the Russell futures 0.86%. So that's kind of the backdrop. We're already exceeding our expectation for the first trading day of the month of August. August generally starts off, a little bit of a pop, but slightly, very, very subdued compared to other months. And then it peaks up a little bit on the first Friday. So this week is supposed to be overall a little bit positive from the first trading day to the Friday. Okay, but the month is not super robust. It's not an incredible performer like we usually have in July. July came in around 2.44%. We were expecting 2.7%. So we were just about on the money on that. And for the month of August, we're only expecting the SPY to perform at about 0.70%. So not even a full percent on that.
And you already have that in the futures. We're up 0.53%.
I know.
Yeah,
so
it's kind of like physics, potential energy.
Yeah, so I mean, the thing is, it could still lift off and at the open, and we could be up some more. But I have to choose my stocks that I'm going to trade based on what the market's giving me. So these are some of my notes here. So the S&P 500 and the NASDAQ 100 have been the strongest kind of through the month of July. At the moment, we're seeing the Russell 2000 futures stronger than the other markets, but it's been pretty choppy sideways, and it hasn't been the best performer through July. So maybe there's a little bit of a change. It is the first trading day of the month, and the Russell does perform a little bit better than the SPY for the first trading day of the month, and even for the first week. So I'm going to give a little bit more benefit of the doubt to the Russell 2000. I'm going to lean a little bit more risk on. Does that make sense, Dave?
Totally.
Okay, just based on how we come out of July. So Russell underperformed the other ones, but now this week is kind of a little bit more in Russell's favor for the week. Okay, not super strong, but nonetheless, it's there. Sure. I don't care for, I feel oil is top heavy, right? I'm not an advisor, okay? I'm not an analyst, I'm a trader. This is stuff that I'm going to be thinking about as I plan my own trades. So I think oil is looking top heavy, and remember that 2 million barrels a day were supposed to be starting to be released by OPEC and Russia combined going into August all the way through December. So we're approaching August here, and well, why bet heavy on oil? So I would be looking for good shorting opportunities in the oil patch.
Year-to-date, energy's been up 24% already, just as a mean reversion sector trade.
Oh, right. Yeah, I mean, it's performed so well for the year already, and we had a pretty good run through June, and then it pulled back a little bit in July, but still, it's just looking kind of top heavy. So the next thing I'd be looking at is we've got China down. I mean, it bounced back a little bit. There's kind of some of the narrative is rising costs, bearish PMI, virus concerns. So, China can kind of, when it's down, it can put a little damper on our market. So as it was kind of bouncing back, we kind of came back a little bit. But I'm not going to be, exposed to that market too much. I want to stay with the U.S. markets predominantly. Mm-hmm. Gold is easing. We're not going to be favoring gold and some of the basic materials. I'm going to look for shorts in that area as well. Yeah, that's kind of my take.
Some other risk-off indicators are Bitcoin's down to pre-market, down about 3%, and the 10-year hasn't done much. It's still about 1.22%. So that's showing a little bit of fear as well.
Well, there is always we can still climb a wall of worry. There is that little bit of fear, but I think I'm going to lean a little bit more to this first week of August, allowing me to not play too defensively. Does that make sense?
Mm-hmm.
I might get more defensive towards the middle of the month, and then the last trading days of the month usually are pretty good. and then the very last day of the month is down. But yeah, I think I'll just lean a little bit more risk on, but still, I'm not going to go like where I'm going to go long a whole bunch of Russell stocks and short the SPY or something.
Mhm.
It has to be a better blend across the industries, if that makes sense.
It does.
Okay. What if any other things you've caught in the news or any macro stuff?
No, it just seems that China's doing some very peculiar things with attacking industries, the market in general, Chinese stocks, Bitcoin. So that's I think a risk out there, and also this Delta variant. Who knows how much that will really affect. I don't see changes in behavior in my area. I'm in Southern California, and those that don't wear masks are not going to wear masks, and they're not going to run out and get the vaccine if they haven't gotten it already. So I don't think people's behavior will change, but we will get this probably petering out. It will accelerate in number of cases, and it will peter out, and that may be bullish for the market overall come 2-3 months from now.
Okay, as yeah, I'm looking through some of the groups here, and it seems that healthcare still has a bit of runway. The odds are favoring some of those. I found a lot of financials were the odds were quite poor for tomorrow and for this week. Information technologies seem to be okay. Some consumer discretionary seems to be all right. And what else I got? Utilities are kind of mixed. What else we got? Real estate seems okay still. Some of the REITs and the mortgage companies were doing fine. Odds were fine. I'm just looking for any standouts here.
Mm-hmm.
Some industrials I'm looking at shorting, some utilities I'm looking at shorting, definitely oil and gas. Going long communication services. You know, I'm not recommending it. I mean, as an advisor, of course, but American Express, I'll give you an example of that. I pulled up 4 ducks on American Express. Odds were for the first day of the month, the odds were kind of neutral, but the performance on average was still robust at 0.2761. And then looking at the whole week, it looks positive at 1.51%. And then looking at RSI and percent B, odds were 53.2, 58.8 on both of those indicators. So I've got like 4 ducks lined up on American Express. Mm-hmm. Pull up a chart on it and see what you think, Dave.
Let's see. It's a solid grind higher. The whole.
Yeah, well, it's still showing there's room there. So it did pull back to that 170 level. That's kind of the simple moving average. So it's not like pegged, you know, it's kind of in that area between a 30 RSI and a 70 RSI. Mm-hmm. It's at the simple moving average on the Bollinger Band. So this is really like kind of pulled back a little bit, but the overall slope is still up. Mm-hmm. And then coming into this week, starting tomorrow, it says it's a favorable trade from the odds perspective. So yeah, I don't mind taking that trade. I mean, my ducks. I'm not going to argue with the stats, and I'm not going to go through every one on my list and look at the charts, but occasionally you just spot check and see. So that's looking really good.
Well, even for tomorrow, for the seasonality almanac, chips look pretty good. The SMH is slightly favorable, first day of the month.
Okay.
So that could be a play as well.
I got some insurance companies looking okay as well. Let's see here.
XLK, so you've got Apple and some of your NASDAQ stuff should be more solid.
Again, it's fun. It's funny. I'm pulling up like machinery, like Allison Transmissions, industrials, things like that. They're all showing pretty bad for not only tomorrow but this week.
Basic materials, industrials, KRE, financials.
So what I think I'm going to do, though, just looking at my list, I'm still going to be relatively balanced. I'm going to try to find like the best odds on the basic materials. There are some that are showing that they are a good bet for this for tomorrow and for this week. I'm going to be long those, and I'm going to be short the ones that are saying, but if I had a choice, I'll probably put a few more short candidates in the basic materials, in the oils, things like that. And I'll still do mixed in the information technology, but I'll try to find a few more longs than shorts, right?
What about
just so you're not completely exposed to the sector, because here's the problem. The market's already up more than it should be for, the start of, and if that continues, if we go into the open and it's still up as much as it is now, you're kind of putting things on at a bit of a premium. That's why it's good to be a bit mixed in it. So short the worst in the sector or in the industry, and long the best, and then have a slight tilt to some of the best industries long and a slight tilt to some of the worst industries short. Do you follow my logic?
Very, very much.
Okay. Another one, Alpha Pro Tech, building products, industrials. It's looking, like a short as well. Yeah. So let's go back and just spot check. One of the things that plays into, how basic materials do, how energy does, things like that, is the US dollar. Where are we at with that? I'm going to flip it over to a daily and look at it. We've rolled over on the US dollar. And then on Friday, it popped back up a little bit, right? But it's still off of its highs. In June, we had that pretty sharp rally up on the dollar. And it continued a bit through July, and then we started to roll over here in the last week of July, right? So when the dollar goes down, it does tend to put a little bit more upside stress on the, commodities, things like that. As the dollar declines, commodity prices usually rise. And, the market, it also can impact the market because it's priced in US dollars. But the way that it had a big down day, and then it had kind of set a new low relative to the last 20 days and then popped up on Friday, I think it's looking like we're okay. We don't have to worry too much about the US dollar for tomorrow.
That looks reasonable.
Okay. Looking at the, you don't have to worry about your Starbucks there. You can take your Mercedes over to the Starbucks and get a coffee, because coffee prices pulled back quite substantially off their high, so that's kind of good. Lumber, what a move back all the way. Complete mean reversion on that. We're looking at, let's look at copper, kind of in the middle of the range for the last 3 months. Did have a pretty good move up in July. For the middle of the month, it just shot up there, but it's kind of mid-range for the 3 months. Same thing with palladium, and let's see, platinum's kind of, down on the low end of the 3 month range. Gold's in the middle of its 3 month range. Silver's a little bit lower than that.
What about steel? I mean, there's some story out that China wants to curb steel production. Maybe that's going to put some pressure on steel.
Let me see if I got U.S. steel in my list here. I'll just do a search for that and find out what the odds are. So I've got too many things with X's in here. We'll have to go way down here. I got a big list here for tomorrow. Okay, there's US Steel. So odds for this week. I don't have the weekly on it. I only have the percent B in the RSI, and RSI is showing that because it had that pretty good performance recently and hit a 97 RSI, the odds are 46.9 with negative performance expected. So that lines up also with the Bollinger Bands. We penetrated the top Bollinger Band just slightly, and the odds coming off of that signal, 47.4. So I'm going to probably lean to short the steel stocks as well.
Mm-hmm.
I mean, it had, they gave it to you, right? They had a good move, and this is the opportunity for a bit of a pullback. I mean, it was up 3.96% on Friday, right? So yeah, that's looking good.
And if August is a little bit more risk off, it could time with that. So pull back and steal, yeah, makes sense.
Yeah, I mean, I'm going to take August up to about the third week of August as more risk off, with the exception of the very first week. We should be a little bit more bullish and sort of allow a little bit more risk on here because of the turn of the month effect, the start of the month, but realize volumes are lighter, and also tomorrow is a holiday in Canada, and so there's institutions that are offline, so there might be a little bit less volume in the U.S. markets as a result. So just be aware of that, and have yourself a good trading day. Hope this chatter helps.
Thanks, Rob.